needs to know this. So today, here she comes. All right, so today we are going to be going over Form 7202. Courtney, I'm not sure if you've heard about Form 7202, but it's how I equate it is like it's equivalent to earned income tax credit. So that's how I like to say that it's equivalent to EIC. So I'm gonna just jump right into the slide, but you know me, I'm a visual person. So as I'm going through the slide, I may stop and go through an actual tax return and let you all see how much of an impact this really has to our clients. And it's something that we really want to ensure that when we're talking to our clients and we're going through the client tax organizer and we're just talking to them about, you know, what occurred in 2020, we want to probe and ask some questions. The one thing that I want to state up front about this credit is there are going to be some tax professionals who abuse the system and who abuse the credit. And just like when we had the education credit, there was no actual documents that we had to provide to the Internal Revenue Service, and several people abused it, and so then they implemented the 1098-T. This here will probably be the same exact thing. We all know that there are going to be tax preparers that abuse it. So as we go through Form 7202, I just want to say to you all, just make sure you do your due diligence and do what we are supposed to do and not try to beat the system. You know me, Courtney, and you'll get to know me as well, Michela, that I'm like, just do it by the book, you guys. Don't try to do no fast shenanigan stuff. And then you end up being audited by the Internal Revenue Service, and then your clients are audited. So this here is almost like the honor system because they're not asking us to upload any documents. So let's get started on Form 7202. I'm gonna, oops, I gotta share my screen. Okay, so Form 7202, that's what we're gonna go through today. I'm gonna make sure you guys get a copy of this, but make sure that you take notes. Make sure that, you know, whatever we go over today in today's training, that you go back to the drawing board, which is the Internal Revenue Service's website, and do some additional research so that you dot your I's and cross your T's as it relates to Form 7202. Okay, so today we're going to talk about what is the FFCRA. We're going to jump into Form 7202. We're going to talk about which employers are eligible, what self-employed individuals need to know, sick for credit for the sick leave, credit for the family, and due diligence and more. Okay, so that's what we're going to talk about. So what exactly is the Family First Coronavirus Response Act? And the acronym for that is FFCRA. On March 20th, March 18th, 2020, President Trump signed into law the Families First Coronavirus Response Act. The acronym for that is FFCRA, which provided additional flexibility for state and unemployment insurance agencies and additional administrative funding to respond to the coronavirus or COVID-19 pandemic. The Coronavirus Aid, which was the Relief, Economics, and Security, which is the CARES Act, was signed on March 27th. It expands to the state level, which provided unemployment insurance for many employers or workers, so to speak, that was impacted by COVID, including workers who were not ordinarily eligible for unemployment, meaning the self-employment, the independent contractors, the sole proprietors, et cetera, et cetera. So what does Form 7202, what is it? It's a credit for sick leave and family leave for certain self-employed individuals. So that means you, that means I, that means anyone who is independent contractor, anyone who is a sole proprietor, anyone that's set up as an LLC, a single member, anyone that's an S Corp, a C Corp could actually fall into this. So let's dive right into what is the form and how are the credits calculated, how can one actually claim it, What do they need to support for due diligence, for your records? Because we don't want to just go by word of mouth. I didn't have COVID. I can't speak for anyone else, but I really didn't have it. No one in my family didn't have it. But if I wanted to fool around with the system, I could actually fill out this form and say that I had COVID. Okay. But guess what? 2, 3 years down the road, when the Internal Revenue Service decides that they want to go and audit all of these small businesses, these tax preparation offices, to determine if they had sufficient backup to support Form 7202, guess what? There's going to be a lot of offices that are going to be hit with fines. There are going to be a lot of offices who their EFIN number is going to be suspended, stripped away from. Why? Because they out period point blank, they lied. They submitted falsified information to the Internal Revenue Service in regards to Form 7202. So at the end, I'm going to talk about due diligence, and I'm also going to share with you guys the form that I created to help me when my clients come in to, get the additional information so that I can put it in the working file for the clients. Okay. So Form 7202 is used to figure the amount of credit an individual is able to claim for qualified sick and family leave due to coronavirus on the 2020 tax return if they were unable to work or had to care for a family member for reasons related to COVID-19. These credits that are given to the taxpayers are refundable credits and are entered on line 12B, Schedule 3, line 40. So they start out with Form 7202, and then they float over to, or they carry over to the 1040, line 12B. Okay, so I'm going to put in here, I put in here some links where you guys can go. You can get the instructions. You can also get a copy of the form itself so that you can become familiar with it. It's a very simple form, to be honest with you, but of course, like anything, you need to read the instructions and you need to be able to articulate what the refundable credit is to your client and how they can benefit from it. Because you all will see when I get over to show you the example in Schedule C, you will see how significant the refundable credit can be to our self-employed individuals if we do what we're supposed to guide and coach them, but on the back end, make sure that we have sufficient backup to support what we're putting in that return. And that goes for everything, you all. Just make sure that you have sufficient backup. So when we talk about credit facts, we're talking about self-employed individuals, independent contractors, sole proprietors, okay? Small business owners can get up to 100% of the refundable money back into their pocketbook, okay? The maximum credit is $15,110. So you guys see why, number one, there's going to be some independent, there's going to be some taxpayers that abuse this because they think that they're doing their client a favor by reducing their taxable income or getting them this credit. Okay, I'm not doing myself a favor, so my goal is to reduce the taxable income of my clients, but my goal is not to set them up for failure, and my goal is not to set myself up for failure. Yes, that 15,110 sounds great, but let's be honest and make sure that we have sufficient backup to support it. Okay, so which employers are eligible for the credit? Okay, the tax credit is available to employers with fewer than 500 employees who provide emergency paid sick leave or emergency paid family and medical leave as required by FFCRA. Okay, whether an employer employs fewer than 50 employees is determined on the basis of who was employed as of April 1st. Not before then, as of April 1st, because that's when the CARES Act officially went into effect on April 1st. Okay, the employee head count can drop below 500, but the employer will be required to comply with the act as of the date and will become eligible for the credit. So self-employed individuals was like, hey, if these large corporations are getting a credit, how come we can't get a credit? What's the government going to do about us? We have small children. We have family members that we had to take off from our business to care for. What about us? And so that's when we started hearing more and more about what the government was going to do with our self-employed individuals. So what about us? What did they do? And I think it was really cool. So in order to be eligible as self-employed, the following must apply, okay? Because we know that at the beginning of 2020, when the SBA loans came out, we know when the PPP loans came out, all of a sudden everybody was self-employed. Everybody was an independent contractor, right? So they've put some stipulations in place. A self-employed individual is eligible for this credit if they are conducting a trade or business as a self-employed individual, and you would be eligible to receive paid sick leave under the Emergency Paid Sick Leave Act if you were an employee of an employer other than yourself, and you would be eligible to receive paid leave, paid family leave under the Emergency Family and Medical Leave Expansion Act if you were an employee of an employer other than yourself. So they're basically saying this applies to self-employed individuals if pretty much like if you were to go and had a JOB and you were working for someone else, the same thing would apply, but it's simply for yourself. It's not like you're going to a JOB, clocking in, you called in sick, you called in and said that your child, your husband, your grandmother, someone is sick and you need to care for them. Okay, so let's continue on. The taxpayer conducts a trade or business as a self-employed individual if the taxpayer is a sole proprietor. The primary purpose for engaging in activity is for income or for profit, and the taxpayer is involved in the activity with continuity and they're doing it regular, okay? The taxpayer must maintain appropriate documentation to show that he or she is a self-employed individual. Once again, let's think about, when we think about coronavirus, when it first broke out, we think about our SBA loans, we think about our PPPs. Guess what? Several business owners did not have sufficient documentation for us as tax preparers to say, you're legal beagle. So the same is going to apply for this credit, this refundable credit. We need to do our due diligence and we need to ask the questions to verify if someone is truly a business owner or if they have this makeshift business that they just came up with after SBA loans came out and said, let me CYA because next year when I go do my business, I need my return. I need to have a business already established. Okay, and that's the mindset. I'm just being really honest with you all. That's the mindset of the crooks, are those that are not truly in business the correct way. All right, we know, we've all seen it. We've all had paperwork before us that was not accurate, that was not timely, that was not factual, but just kind of thrown together, if I can even say it was thrown together. All right. So let's talk about this credit because this is a huge credit. So an eligible self-employed individual qualifies for a credit for sick leave if the taxpayer was unable to perform services during the period of April 1st to December 31st. So it started April 1st. Even though the law was signed in March, you have to provide proof that you were not able to perform your normal duties because you were on sick leave, okay, as of April 1st through December 31st. As a self-employed individual, because one of the following reasons occurred. The taxpayer was subject to a federal, state, or local quarantine or isolation order related to COVID-19. Okay, I want you guys to remember, and I talk about it on the back end. Not all states, there's 5 states to date that I learned about that were not under orders for quarantine or isolation, either part of this period, April 1st to December 31st, or they were not under the order at all. They were either partial or not under the order at all. Okay.
Georgia had to be one of those states because people in Atlanta have been partying the whole time. So
I think they just don't care there, but they're actually under order. But
really,
yes, they
that's
are under
crazy.
order, but the folks just don't care. They just partying like
Okay.
it's 1999.
Yes.
But
That's true. I'm in
Yeah.
Georgia, and yeah, we were under, and they were partying like it's
I just thought there was no
1999.
corona there.
people acting like they don't care if they get COVID.
Yeah,
I was
yeah.
complaining today because I saw on social media one of my clients passed. And when I went to her page, I'm like, she had a party, you guys. They were partying in November and December. And I mean, like gatherings. And I was like, she made her last post on December 30th. And she passed away today.
It's awful.
Okay. So let's take it serious, folks. But no, Georgia is not on that list.
Okay.
So the taxpayer was advised by a healthcare provider to self-quarantine due to concerns related to COVID-19, or the taxpayer. And remember, if you guys are listening to me closely, because when I get to the next slide, I'm going to say something different. But I'm talking specifically about the taxpayer right now. I'm not talking about relatives. I'm not talking about children, son, anyone. I'm talking about the taxpayer. Okay. The taxpayer experiences symptoms of COVID-19 and had to seek medical diagnosis, medical attention. So either the taxpayer was under some type of quarantine, isolation, they were advised by their primary care physician, a doctor, ER, to self-quarantine, or their doctor just said, you need to shut down. Okay. So if that is the case, if you, I, or anyone, our clients, they are eligible for a credit on a per day basis of $511. So $511 per day up to 10 days. Okay. So that's equivalent to $5,110. Now, that number sounds nice, it sounds great, but again, a lot of this, as we go through the calculations and when we jump into the tax return, you will see that this will ultimately like be a percentage based upon the total revenue of the self-employed individual. Okay, I'll give you guys a great example at the end. Okay, so now let's talk about sick care when you're caring for someone else. All right, the same thing applies. If you're caring for your son or daughter or a family member, then the credit is $200 per day. The same thing applies. Either you were in isolation, the state, the federal, local said you must stay at home, quarantine, stay indoors, or your primary care physician, ER doctor, someone said you have COVID-19, you need to go in isolation, you need to quarantine, or the doctor felt that you had some type of symptoms and he said stay away from the general public, don't go to work, whatever the case may be. If any of those 3 things are applicable to your clients, then in this case, remember I said it was specifically the taxpayer, but in this case, they're caring for an individual. So if someone, spouse or one of their kids or anything like that had the coronavirus and they had to take off of work as a self-employed individual, in this case, they're entitled to $200 per day up to 10 days. So that's equivalent to $2,000. Okay, so it gets better. So let's just kind of recap this. So the credit for emergency paid sick leave for reasons number 1, 2, and 3 that I gave a few seconds ago, it's $511 per day up to 10 days, which is $5,110. If you're caring for someone, such as a child, your mom, your dad, your son, then it's $200 per day for 10 days, up to $2,000. So it doesn't matter if anybody, when they said quarantine, what did they say? For 14 days, right? Even though they said 14 days, we can only get a refundable credit up to 10 days. So it doesn't matter if they were 11 days, 13, 12, 20, they can only get a credit up to 10 days. Okay, so let's jump into this even a little further. Credit for the family leave. So credit for family leave. A credit is also available for self-employed individuals who were unable to perform their duties from April 1st to December 31st as a self-employed individual because they had to provide care for their son or daughter who was under the age of 18, who could not either go to school or maybe their daycare provider was closed for reasons related to COVID-19. In this case, the credit is $200 per day up to 50 days. So, Michaela, you have a young daughter. You are self-employed. So if your daughter's daycare was closed, or if she's not in school, so if her daycare provider was closed, then you would be in a situation where she was at home with you. You had to take care of her. So then you would be able to claim up to 50 days at $200 per day. So what I need for you all to do to to help yourself, help your client is, in this case, like I have daycare providers as clients. I'm going to go over this with my daycare providers. I'm going to send this to my daycare providers and let them know, to let their parents know, but I'm also letting my daycare providers in on the situation that, hey, why don't you move forward and let your parents know, give them a notice, the dates that you were closed in 2020, so that they have something already to give to their tax professional as documentation, as proof. Okay, I'm only doing that because I have maybe 5. They've been my clients for years. So as I was doing this, I'm like, I need to call them, I need to send this to them in an email, or do a video or something and send it to them so that they know, because it definitely impacts them. So how many days? What's the maximum amount of days for this particular credit when a mom, dad, or someone that is self-employed had to remove themselves from the business because they had a young child at home, a son or daughter, and they want to take this credit? What's the maximum amount of days, you all?
10 days.
No, not for this
50,
one.
50 days.
This one
Oh,
is,
I thought it was 10.
yeah, this one is
Down.
50. So it's gonna get tricky, but believe me, Courtney, when you go to put this in a tax return and it's gonna calculate for you and it's gonna do all the work. But in your mind, you gotta know the days.
Okay.
So but it'll calculate, and we're gonna get to that, and I'm gonna show you guys. So if you have a son or daughter, now when you guys go into Form 7202, FRCCA defines what is a son or daughter. And so I think I put this on the chart. Did I put it? I did. I'm sorry. So what is a son or daughter? Under FFCRA, a son or daughter is your own child, which includes your biological child, your adopted child, your foster child, your stepchild, a legal ward, or a child who is a child for whom you are standing in local, I don't know how to pronounce this word, parentis, someone with day-to-day responsibilities to care for or financially support a child. So it's not just like my son, my daughter, it could be my stepson, my stepdaughter. someone that is biologically I'm supporting, I'm taking care of, I adopted them, my stepkids. So you see what FFCRA or how they define son or daughter. It's not maybe just necessarily your biological son or daughter, but you see how they have it broken out, okay? So credit limitation based on self-employment income. The credit for self-employed individuals is further limited to the self-employment income divided by 260 for purposes of the 511-day limit and 67% of the above limit for purposes of both of the $200 per day limit. So I do have an example in here for you guys. So if the total self-employed income reported on line 31 of Schedule C 1040 is 5,000, the $511 day limit is reduced to $19 per day. That's 5,000 divided by the 260, and the $200 per day limits are reduced to $13 per day, and that calculation is the 19. Did I do that right? Yeah, 19 times 67%. So remember, all of this, you all, will be calculated in your tax software. But once again, I need for you all to do your due diligence. I need for you all to become familiar with this so that as we are going through saving our clients money, because that's ultimately what we want to do is save our clients money, we want to ensure that we know what this credit is all about, this refundable credit. All right. And you guys want to continue to use that term, refundable credit, to your client. When you're doing a wrap up with your clients and they're wondering, gosh, why do I pay so much? Well, I was able to save you $15,110 by creating or doing the Form 7202. Okay. So if you save somebody $15,110, they ought to be happy, really, you know, not no frown on their face, but that's a lot. And we're going to jump right into it. So let me go through the states and let me go through a few more slides, and then I'll show you guys what the form looks like, how it impacts one's tax liability. Okay. When we talk about someone who may be owing $39,000, we put these credits in. What does that look like then? All right. So we were talking about the states that did not have a stay-at-home order, either part year, partial, you know, some point. Arkansas, Iowa, Nebraska, North Dakota, and South Dakota are the 5 states that did not implement either partially or full year the stay-at-home order. Okay. Maybe they don't have a lot of people there. I don't know. I don't know nothing about Iowa, nothing about Nebraska, North Dakota, South Dakota. Arkansas was actually shocked that they were on this list, but they're on here. Okay. So I said it once, I said it twice, I said it 3 times. I'm gonna say it again. We must do our due diligence. Okay. We must do due diligence and get the questions to get the answers to the questions that we need to put in our folder so that in 2 years, 3 years, when all of this stuff settles, the dust settles, and the IRS comes knocking at the door, you want to have a file with the pertinent information to back up what you said. Otherwise, you know you're going to be subject to some penalties and fees. All right. So let's take a look really quickly. I'm going to get out of this slide. And I want to jump into, oh, it logged me out. Gosh. Okay, so I'm gonna stop sharing for a second till I log in. And then it'll kick me out. Let's see, show password. questions do you all have as I log into the software to kind of give you guys an example of the form itself, the questions, how it looks, et cetera, et cetera? What questions do you guys have for me?
I honestly didn't even know about this credit at first. So I'm glad that you brought it up because I had not heard about this. And I feel like it's something that I think even my husband might qualify for this. So I'm definitely gonna read more up on it, but I don't really have any questions so far.
Yeah, you know, they
I'm just
slapped
glad you
on the
brought it up.
credits on us at the last minute, but we got to learn them. Also, make sure you know about the recovery rebate credit too, Courtney. Do you
Yeah,
know?
that's what I thought you were referring to, honestly, when you said that. I didn't know the form name, so I thought that's what you were gonna you were bringing up that, but now I
We'll
see
go
that
over
it's
that in a
included.
moment as well. We'll have some
It is.
time to go over that because the recovery rebate, it automatically calculates as well, but you do want to make sure that you know the amount that the client got, if they got the, what was it, the 1,200 in the spring, fall, spring, summer, or if they got this 600. So it's, for me, I'm gonna say it's a little complicated because that 600, technically speaking, I mean, we're all accountants here, but technically speaking, the money was released on December 31st from the
Yeah.
Internal Revenue Service, but the money did not hit the taxpayer's account until 2021. So if we think about accrual basis or cash basis, you know, are we supposed, I can tell you that the IRS probably want us to count that on the 2020 tax return. So they say that we're supposed to get a form 14, what is it, 1444A, I think that's the number that all taxpayers should be getting to incorporate that into the tax return. So we shall see. We shall see. Because they have out, I haven't heard of anyone that got a form 1444A just yet. But they'll probably be hitting, they probably will come out the last day of the month. You know, that's the IRS. So let's jump into, let me open up this tax return and see who I was playing around. Okay. Yeah, okay. So I just did a mock return really quickly to give you guys an overview. I just put in some stuff. So can you guys see my screen?
Yes.
Okay, perfect. Okay, so I just went in, I did a Schedule C real quick. I didn't even do a Schedule C. All I did was put in the gross receipts and I said that this person made 178,000. I didn't do anything else. So at 178,000, I want you guys to look at what the tax liability is. That's the total income for the business, 39,671. Okay, so I added in here Schedule 7202. And let's go to 7202. So I want to put in the number of days you were unable to perform services as a self-employed individual because a certain coronavirus related care you required. So I'm just going to put 10 in here because what did I say was the maximum amount of days? 10. And so the number of days you were unable to perform services as a self-employed individual because you were caring for another person. The maximum amount, again, is 10. The only difference is the $200 versus the $511. So I'm going to put 10, that they cared for someone for 10 days. Now, again, for the most part, it's going to calculate, but this is asking me for the gross revenue or the amount that this taxpayer had in net earnings on their self-employed Schedule C. It just says net earnings from self-employed, but I know it's Schedule C. So it was 178. Watch the number up here for the time being. So I put in what the taxpayer made, their net income, 178. They had 10 days taking care of themselves, 10 days taking care of a family member. So you see the amount dropped, right? That number was 139. It went down to 34K. Now, I'm not done because I want to still put more numbers in here. I want to scroll down to line number 25 And I had to take care of, this person had to take care of their child. The daycare was closed or the school was closed. I told you that the maximum amount of days that they can use is 50 days, okay? So let's just put 50 in here. Let's watch this number here. And we also have to put in here, what were the net earnings? So the net earnings were 178. So you see how that number dropped drastically? You guys see where that number started out?
Yes.
Mhm.
It was originally 39K. It's dropped to $24,294. Why? Because we took advantage of Form 7202, which were the tax refundable credits related to sick care. Let's go back to the name of the form. Credits for sick leave, family leave, and for certain self-employed individuals. So, Courtney, you had a puzzled look when we dropped from 39 to 34. So I'm gonna ask you, what questions do you have?
I don't know what my question is. I guess I would have to just, I'm like a person who really learns by doing, so I probably would just need to run through it.
Yeah, and that's how I am. I had to really sit and play with my, play with different scenarios to kind of see, you know, is this real?
Yeah.
But just because I was like, wow, this went from 39 to 24. But guess what? It looks good. And my clients can tell me that they were out 10 days here, 10 days there, and 50 days there to get, and this was the maximum, because if we were to add it up, it should be the 15,110 that they got. Just, I'm almost certain it was, just because it was at 39. Okay, so what do we want to do when a client comes to us and we start probing them and asking them these questions? What do we want to do? We want to make sure that we do our due diligence. And so what I have done is come up with a list of questions and put them on a Google Doc. So when someone says that they qualify for this, I'm just going to send them this link for them to fill out the questions, such as their name, their social security, their DOB, you know, all these questions here. Are you self-employed? Were you self-employed from this time frame? So I'm asking them all these questions, but at the end, and I can't get to it, but at the end, the very last question or statement is, it states that you are submitting true and factual information, you know, perjury, et cetera, et cetera. So I'm asking them to fill this out so that 2-3 years, when the IRS decides, oh, let's audit me, I have backup in my files that says that Jimmy gave me support. The very last thing on here is ask them to upload any support to share that they had COVID. Okay, that could mean they went to the doctor, they got a printout, maybe they're gonna come with, I don't have the printout. I'm gonna tell you guys, everybody who had COVID, or most people that had COVID, took a snapshot on their camera, sent it to somebody. So they have that backup somewhere. But if you let them know, here's the impact, here's what your tax liability would look like, versus here's where it's at, I need the backup in order for us to write it off. They're gonna find a way, find a way to get the backup. Whether they call their primary care physician, go back to the pharmacist, I don't know, sorry guys, they're gonna find a way to come up with backup to support this sheet. If I say, unfortunately, I have to do my due diligence, I won't be in a position to key the credit in until I get supporting document that actually shows me that you have the coronavirus. They're gonna do what it takes to get it. Don't you guys think so?
Yeah.
Yeah.
Want that credit, you know, find a way, make a way type of person. Okay.
Cosette,
Yes.
I know that the job, well, I don't know which other job, but I know the county LA Superior Court, they give, like if I were still working for Superior Court and I called HR and I said, you know, I've been around somebody who's been exposed to COVID, I need to utilize the 14 days. I know that they do not ask you for proof because it's a part of the HIPAA law. Like you can't ask you for, medical documents or anything like that. Basically on this right now, they have to take your word for it because I know one person who did it. And I said, well, did you have to show something? Like, no, I didn't. They actually were around somebody who had COVID. So the job took their word for it. But if the IRS did need proof, I'm pretty sure they could get it from, their doctor. But I know the employer, that particular employer, is not asking for proof.
So keep in mind, there are two credits that are out there. As an employer, the employers of these large organizations, and that's why this was created, because the employers were being hit with, employees taking excess PTO, employees taking sick time, and maybe it wasn't on the books, but because the FFC, whatever it's called, the FFCRA was implemented, the employers were obligated to ensure the safety of the other employees by saying, okay, stay at home, Regina, don't come in until after 14 days you've been quarantined. So that's why this came about well, not so much this, but this is to protect the self-employed individuals. So on the JOB employer side, no, they cannot ask for backup to support for HIPAA. But on this side, I'm gonna say it like this. This is how I'm gonna put it in my words, Cosette's words, Cosetteism. Because we are issuing money, the government wants proof that before we issue you this money, this credit, that they have backup to support. And it's, again, the thing that it's going to be abused. It's not a matter of if. This is going to be abused by select preparers. And so the IRS is saying, if Regina comes to you and says she had corona, ask Regina for some kind of backup. I can take it the face value that you're giving me and put it in the return, but I do know that I have a responsibility to question what I put in a return. The IRS doesn't want us to just be, processors and go by our client's word, because our clients will tell us anything to get a dollar. So
True.
I
get
understand the HIPAA law. I do understand it very clear. But once again, like I said, we're talking money, we're talking human beings. If we tell them that they can't get this $15,110 until we get some type of documentation showing that either the daycare was closed, the school was closed, that's not necessarily medical related. So they should be able to get us something. And I mean, we don't want to assume. We know the schools was closed, but we still got to cover our ass. Bottom line, excuse my language, but we got to cover ourselves and protect ourselves. This is our livelihood. We have a number that can be snatched away from us. And if it's snatched away from us, then it takes away from our livelihood. So I don't care what they want to say about the HIPAA law. Excuse me, I really don't at this point, in this juncture. If somebody trying to get an extra $15,110, come with it. Come with the backup to support it.
I get it. I get it.
Yeah, I mean, like, me, you've gone through the training, the tax school. I've had my license too long. I value it. And so I don't let other people like dictate 15,000. Go to somebody else down the street that will put it in your return.
Right.
I'm cool with it.
Somebody who's not working with integrity. And like you said, it's going to be a lot of preparers that are not working with integrity just to make their clients happy, and it will come back to bite them later.
And this is how the IRS is going to find out. All of a sudden, that tax office processes a lot of Schedule Cs. And all of a sudden, everybody in that community was impacted by coronavirus. It may be hypothetically a state where the count level was not as high as maybe California or some of the other states. But all of a sudden, the state, and just say, oh, Iowa, that didn't, you know, but you guys gotta, not you guys, but we as human beings gotta realize that the people that work for I was gonna say FBI, for IRS are individuals just like us. They get the word on the street. They know what's going on. They get the gossip just like we. So they know what's going on. And all they need to do is get that information to the criminal division, who knows what's going on in the street, or their supervisor. Did you guys hear? And it just moves up the ladder, and it moves up to the criminal side. And it's like a snitch who goes to work and says, did you hear about this? My friend said this. So bottom line, just don't do it. I love these conversations, but just don't do it. All right, so I created this form, and let's just go through this form so you guys can see what it all says, because it's not gonna let me. Let me see if it lets me. Okay, so she needs to put something there in case somebody does that. Were you self-employed? Yes. Were you subject to? Yes. What is the name of the government entity? So I'm just gonna put government entity. I'm just gonna put whatever that man's name was, governor. Governor, I'll leave it like that. Were you advised by a healthcare provider? If yes, I don't know, July 4th through July. Did you experience symptoms? Yeah. What dates? Same dates. I'm just gonna, let's see. Oh, it can't be January, it has to be April. So that would be like, oh, it looks like this is before the act went into effect. Did you receive a positive? Yes. So right here, I mean, like this right here, Regina, to your question, did you receive a positive COVID-19 test? Yes, that could be borderline. It's not borderline. That could be stepping into the HIPAA, but we're asking them, yes, specific dates. And then I'm asking them to upload any documents to support it. Again, I'm trying to protect myself, because the IRS don't come to those offices that have a bunch of 7202s and a bunch of Schedule Cs. Okay, so these are all the questions that it has in here. So I can send you guys this link. You can create your own form. Actually, I created it in Word, and then I had someone do this for me. So I can send this to you guys. My team creates these for us. So, but I'll send you the actual Word doc. So you guys see how I was able to drop this from 30, it was 39, I think, when we started, down to 24,000, right? So
I had a quick question before you moved on, Cosette. Did you,
yeah.
just real quick, did you embed that directly into your website so that you, like, do you have them filling this stuff out before you even get on the phone, like when they decide that they are a client, or is this something that you only send once you've talked to them and you know that they might be trying to get that credit?
No. Why am I? I'm lost. Wait a minute. Why didn't it just pop right up? So this is what I use, Onboardable here. So when my clients come in, they will fill out this. Based on their questionnaire here and what they told me. Oh, wait. So these didn't even fill out their sheet. I just sent them an email to, here's onboardable, blah, 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 blah. So they came in, they set themselves up. But as you can see, she has not completed the organizer. So if I click
Okay.
on here, she has nothing in here. But based on what she completes here, I have an opportunity to send her more information. So
Okay,
I can
got
send
it.
her more information, and I would just take that link and send it to her and tell her based on the questions that she answered, I need her to complete this additional documentation before I jump into her return. So, and then based on what she fill out here, I may not have enough information to determine if she was impacted by COVID. But simple things will click, like, did she have dependents? If she had dependents, I may ask, how did last year go? Was anybody sick? But you guys got to remember also, like, and I don't understand this. Some people are not telling people they have COVID. They're like keeping it a secret. That's their prerogative. You know what I mean? I could have sworn I turned my emails off. That's their prerogative. But if I know, like if I saw them, I heard them, they told me, then I'm gonna ask. And I may just ask, how did the kids, what happened with daycare? You know, if they're used to filling out a form 2441 and maybe they didn't fill out a form 2441, they may say, well, the kids weren't in school this year. We didn't have daycare. It was very minimum. You know, those are just little crumbs to say, oh, here's some questions that I need to ask. Can I turn my email on? Because it's sure coming through. But, you know, you just got to listen to your clients and little things will just pop up. Like, let me just ask. And a lot of people don't know about this credit, Courtney, just like you don't know about it.
Yeah.
Like you guys saw, well, you didn't necessarily see, but on my page today, I think before I went on live, like I put something like, let me see, what did I put? I put something. You just got to let people know a little. I put something like, you might not want to use TurboTax this year or something.
Yeah, I agree. It's even for simple returns, it's not going to be so simple this year. So
yeah, you might want to skip TurboTax this year. And then I did, you know, COVID tax credits. I put this, don't rush to get your taxes done. You just might miss out on those tax credits. But who am I? Tax expert. So a lot of people don't know about them because they're new. We as professionals didn't know about them until the last couple of weeks of December and into January when we started hearing about them. You know, I've said it time and time again to my tax students. The IRS always slaps something to us at the end of the year. Like they just, voila, we're serving you something different on the platter this year. Learn this. So, you know, I did this an hour ago. So I'm just trying to tell y'all, like, slow down, don't rush. You know, do some posts. What's that song? Don't rush. Boom, there you go. You know,
yeah.
you know? So I showed you guys this. This is form 7202. What I need for you to do is, let me see if I can get to it myself. So let's go here. What I would like to see you guys do is pull this up, go to the IRS website, become familiar with it, look at what the government is saying. This here is just the instructions, but of course, you know, it's still, I think it's still in, no, it's not in draft mode because it's on the software. But read through it, read the instructions, learn what it has to say. I think this is going to take me to the same thing. It is. But become familiar with it. Understand what it's saying. Read the instructions. Know what you need to communicate and articulate to your clients so that you are getting them back. You guys know you'd be somebody's hero if you reduce their tax liability from 39 to 24 because they don't know about this. So when you start probing and asking questions, they be like, God dog, you got me back. You got my tax liability down to 24. Let's submit it. I'm cool. I can pay that. That would be me. Like, I want to pay 39, but I'm cool with 24. So be their best friend. Okay. Be their best friend this year. So let's jump into another form. All right. I don't know what this form number is, so let me just cheat. Only 240 is all right. Well, let me see, recovery. I don't know what this, let me see, let me go this way. Okay, never mind. Let me skip that thought because it's in here already. Let me just go through these words. Oh, okay, here it is. So let's say somebody didn't get their recovery. I had to think for a minute. Okay, so let's say they didn't get their recovery. Let's say they didn't get their stimulus check. So we're going to complete this recovery rebate worksheet. Again, this is a Schedule C client of ours. That's why we're doing it within their personal return. Otherwise, this would be mute if I'm trying to reduce a corporation or a business returns, LLC, 1120S or 1120. Okay. So in this case, this is Schedule C, a single member or sole proprietor. So let's say they did not get their stimulus check. So it's a question down here. Enter the amount, if any, up here first, if any, for the first check that they received. So like myself, I ain't got nothing from the government. So I'm gonna put a 0 here. And I don't think this is gonna calculate because I didn't put in the demographic, but well, let's say I did get back 1,200. I don't think it's gonna work because I don't have any information on the front end. But my example would have been, I got back 1,200 this time, but I didn't get back my 6. So it should have calculated here that my credit for this return would be $600. Okay. Now, if I didn't get anything, then it should calculate 1,800. And so it would reduce my tax liability here. Okay. But I don't have any different demographic information in here, so it's not going to calculate everything. Okay. So Courtney, Regina, I know you've gone through this training with me. Michela, I don't know, you probably have started on a few returns, but make sure you guys are all aware of the rebate credit that's available to our clients as well. So it basically states that if a taxpayer was eligible, because not all taxpayers was eligible for the stimulus check if their income was outside the threshold of 75K is the threshold, I believe. So that's single also. But if they were outside the threshold, and if you don't know what that threshold is, then you can Google and do a little bit of research and determine what it is. Then they should be able to recoup the recovery over here, the amount, whether they didn't get the first stimulus check, whether they didn't get the second stimulus check. There's also something in here, you guys, for individuals who had kids in 2020, they can recoup that that new child's rebate or stimulus payment as well. Okay. So you know right off the bat, if someone had a kid, my niece had a kid, my niece had my grandnephew on December 30th. So Is she
Wow.
eligible? When I found
Yes,
that
she
out,
made it just in time.
right, when I found that out, I texted her. I was like, here, Lauren, make sure when you take your taxes in that you get this credit. You know, I said, but make sure you have his social security number, et cetera, et cetera. So, you know, so these things, a lot of taxpayers are not aware of, especially those that are just not in the know. I'm telling you guys, clients rely on us to provide value, to get them more money back, to save on their taxes, all of the above. So we got to be up on our game. If you all have not taken a refresher course, you might not want to at this late in the game, but there's plenty of stuff that pops up, at least in my inbox every day, about taking different courses. Watch some YouTube lives, whatever the case may be. Do some YouTube lives for yourself. But this is the credit. These are two of the credits that are available to us. Now, there is another credit, and I didn't get the chance to do my due diligence and look it up because I was studying this and the other one. There is another, it's called the Earned Income Tax Credit Look Back. Let me,
Yeah, I've heard it. I heard of that one.
Earned income tax credit. So yeah, so by the time I see you guys next week, I will have put together a slide to train you on this. But just know, like, put the brakes on, in all honesty. We do know that clients are going to start knocking on the door this weekend because they're going to get their W-2s and they're going to be ready to move. So I want you guys to not be so quick, so fast to just want the dollar bill. You know, I know it's the season is January. This is the month to, you know, hit it off well. But do yourself a favor and do your clients a favor, because I would hate to see you guys in a predicament where you have to do a ton of amended returns because either you move too fast or your client moved too fast, one or the other. So just kind of slow down, ask the questions, make sure you dot your I's, cross your T's on everything that you do to help them. And you guys know if you do an amended return, it's going to take a little longer. Yes, we can electronically file amended returns, thank God, but it's still going to cost a little bit of habit. You know, people are broke, people are really want money nowadays. They can't pay rent, they're unemployed. So let's make sure we get their money up front instead of having to do an amended return and then wait a few weeks before it gets processed. Okay, so let's help our clients is really where I'm going. Add value, be of service, and then they will come back, they will refer you, and so on and so forth. Okay, so let's open it up for credits. For questions, I'm going to take this off of stop share and open it up for credit. I sent it out to the other preparers. They probably in the office had very, they're in Atlanta as well, Michelle. So what questions do you ladies have? I'll start with you, Regina. Can you go first?
Okay, I'm sorry. I was trying to get to my mute. I'm on my phone. I don't have any questions. I think you went over really thorough. And of course, I always watch the video in the bed again so I can get everything without people bothering me in my environment.
Mhm.
But I think that a lot of, if your business has a lot of EIC, then you're going to be using that new form. I think, off the top. I'm just want to be
new form, are you talking about
the 7202?
Well, no, not necessarily. No, because the 7202 they have to be self-employed.
Correct. Okay.
But remember, I just said that we all need to do this because this look back provision for earned income tax credit, now that I haven't looked into it, so I can't speak and educate you guys on it. But you know me, I'm gonna do my homework. I'll be up at 3 a.m. doing something, looking at it, reading about it, to educate you guys. But that's when I get a lot done. If y'all don't know, in the middle of the night, middle of the morning or hours. But I'll be up reading about it so that I can come back and educate you guys on what it's all about. But what I'm really saying, Regina, is this week, like, they're gonna be knocking on your door. Like, I'm ready to get my return done. Friday, employers will be issuing W-2s. It's the second Friday of the month. I know this cycle. This is the second Friday of the month. If they don't get them this Friday, they're gonna get them next week. Because payroll is probably Friday. So the payroll person may not issue them, but they're gonna issue them next week when the employees come back to work, and they're gonna be knocking at the door ready to go. So I really want us to focus on this look back EITC credit, so that we know what we're talking about when we have our earned income tax credit clients here in front of us. Michela, we talked the other day, you have a lot of EICs, so that's definitely something you want to educate yourself on. Make sure you know it backwards and forwards so that nobody comes back and like, I heard about this credit and my girlfriend said she got an extra 2,000 because of that. How come you didn't calculate that on my return? Right?
Right.
Do some amendments. So we want to avoid those type of situations at all costs possible, because that's just really extra work on us. And then those clients are really frustrated and mad at us. And then word on the street is, you go down the street, Cosette messed up, Michaela messed up, Michela messed up, Regina, Courtney messed up. Don't go to them. That's all you do. Don't go to them. They messed up. And I had to wait an extra 3 months to get my $2,000 and had to pay my rent. And you know how people do it.
Mm-hmm. Not very forgiving at all.
No, not at all, not at all. So just save face where possible. So yeah, but look back, Regina, if you can find something before I get to you. Well, you'll be on training with me this weekend. So I'll be talking, I will have it before then. I'll talk about it then. Or you know me, I'll do a video on it and just send it to you guys. So Michela, what do you have?
So I've looked at it a little bit. I don't know much, but I do know what it basically entails is that they will be able to use their 2019 income instead of the 2020 income to qualify for the earned income credit.
Right.
But it has to do something with their income. That's where I'm a little stooped at if their income is lower or higher. Okay. But that's the little tricky part. And then on the 7202, what I just saw this article, it's been out over 2 weeks, that basically the IRS is going to start auditing small businesses by 50% because they said they've had a low, I guess, some type of low audit rate. And so my question is like, because this is where I'm stooped at, where do I find some new due diligence forms? Because I just got kind of due diligence forms based off the TCJA, but there's so many moving parts this year that I don't want to miss asking a question, because I've looked at the IRS intake form and they don't have any of those questions on their intake form.
Okay, so a couple of questions. You talking about the due diligence for the look back?
Everything.
Okay, so let me start. You gave me a lot. Okay, so let's talk about look back. So I already got the answer to the look back without studying. No, I'm just kidding. So the look back, think about it. What is EITC? It's earned income credit.
Got it.
Earned, that's the key word, earned. So you know why they having us look back without even like studying it? A lot of folks were on unemployment this year, so they did not have earned income. So that's why some folks only work January and February. They earned income maybe $4,000. I don't know. But if we look back, their earned income could be somewhere of $24,000, $32,000, $40,000. So the higher you earn, the more income tax credit you get back. So again, they're helping the taxpayer by saying, we're doing you a favor. you didn't have enough enough earned income this year to get that full EIC credit of 6,000, whatever, the 3,200, whatever it is per child. You know, you didn't have enough to get that credit. But if we look at last year and take last year's earned income, then you're going to get a bigger refund. So I just figured it out without even figuring it out. That's what it is. Because earned income is based on the money that you earn. It's not based on your retirement. It's not based on unemployment. You have to go to a JOB and make some kind of money and have the dependents to back it up. The qualified dependents. So that's pretty much what it is in a nutshell, but I'm gonna read the fine print, like what are the do's, the don'ts, et cetera, et cetera. But that's what it is.
Okay. And I've already had.
So here's the other thing, you guys, our newbies. It's going to be very critical that we ask for last year's tax return. You got to have 2019 income tax return because you need to find out what their earned income, what their earned taxable wages was. And I'm sure once we do the research, it'll tell us what line we need to refer to determine what was the earned income for the prior year. Claiming, how to qualify for earned income tax credit if you lost your job in 2020. That's what it's telling us. So we just need to do a little bit of reading, but it's probably really easy. But we do need to ensure that we ask our clients for the 2019 tax return if we did not process their return. So just slow down. Y'all might become a little, you know, have a little sip here and there of some wine as things get stressful, but just slow down. The beauty of it, you guys, the beauty of it, I don't know about you, Michelle, because you are in a brick and mortar, but we don't have to see these people face to face. So we can slow down, refer to reference tools over here as this information is coming. And you all know that after the first couple of ones, 10, you got it. Oh, I got it. Then you're gonna have that one that's gonna come and just like, what do I do with this? Raise your hand, use the resources that you have, and just ask questions, you guys, because it's all new to all of us right about now. But if we reach out, ask each other questions, you know, you guys know me, Regina, I'm all about like your power partner, someone you can call, quick 5 minutes every day. How's it doing? What you do yesterday? What questions? Where'd you get stuck? How can I help you? Boom. Don't make it a pity party session, but just accountability partners. You need them during tax season. I got the same text. I got the same similar questions 2 minutes ago from 2 of my accountability partners today. And they both said the same thing, and it came like within seconds, really. Like one popped up, then the other one popped up, and I laughed at both of them because they both said the same thing, but different ways. But we check in on each other every morning. They calling me, what about 7202? I don't know, I'm gonna study it and I'll tell you. What about PPP? What about this? What about that? We'll get it. And so we just pass ideas, and I want you guys to do the same. So hopefully this has been helpful. I didn't get to you, Courtney. Did you finish with your questions, Michelle?
Yes, and then I've had a few clients to call me and say they got unemployment, but they didn't pay the taxes on the money. I said, hey, it's taxable income, but
so
you know,
those
it's a harsh reality.
Yeah, I wonder. Well, those people won't qualify for earned income credit if they didn't in the past years, because it's not
earned income.
But if they started out this year with a JOB, they could possibly be EIC this year because they didn't make a lot. So it's not a look back, but it's a, you know, a new situation. So that EIC may offset what they owe. If they have children, you know, it's a lot of variables. It's a lot of variables. So I said it again, put the brakes on, slow down, don't rush, take your time. But make the money.
Yeah. So where would what's a good resource for me to go? Because I was thinking about just ordering the tax book, but where's a good place for me to get some due diligence forms for all these new credits?
Well, I would say number one, I'll give you guys this one for 7202. I think for EIC, I honestly would say, and I trained this in my class, in the tax class, I would just rely on form 8860, is it 8867? I would just rely on that. I wouldn't, in all honesty, invest in anything else. Because if you follow what's on form 8867 and you ask for support, and my support is birth certificate, immunization card, or school records. Those are the three things that I ask for. And I document, I check it, I ask those questions, then I think I'm good. You know, I did my due diligence. Now, as far as the look back, the IRS know what they made the prior year. So it's not like we can do anything to, you know, finagle it. And I'm sure that it's built into the software to confirm if we put in 20,000, it's going to confirm on the other end. If not, we're going to get an error message and say EIC doesn't match with what's on the file or something like that, you know? So it's built in to not let us fail in that aspect. But due diligence, I would just make sure you do what you've been doing as far as asking for support. You really got to do it. You really got to do it. And
can I send you my forms?
Yeah, I would slow down. I would. I mean, based on what you shared with me, I would just slow down. And if you have a high volume of EICs, if you have to really like turn some people away because they are not complying, you just got to do what you got to do. You have to protect yourself.
All right, thank you.
And it's a great transition because the one thing that I do know, and this is for every single one of you on the call, on the Zoom, as much as we want new clients, we have to come to realization that every client is not for us. We have to also put this in God's hands and realize that when we release one client who is not meant to be for us, then the next client is going to come, slide right on in, and be the client that we want. So I've been in business long enough to just say, I'm not even hungry for it. If you don't want me, if you can't cooperate, we weren't meant to partner. We weren't meant to work together. And I'm good with it. I'm good with going to bed and not having a headache over $600-700 because I know the next one is going to come through. God's going to bless me, and it's going to be what I ask for, not what I want, what I've prayed and asked for it. So I'm not trying to go churchy or spiritual on you guys, but I'm just being honest. Bottom line, I don't care about every client. Go next door, they'll deal with you. So that's a mindset, Michelle, that you got to come to grips with. Like, I can't help everybody. And just be fine with it and know that release it and the next ones will come. You gotta release it. And when you release it, the doors will open up and God will just bring you what you ask for. And you gotta be careful what you ask for. So if you asking God, you gotta be clear, you gotta be precise, and you gotta tell him who you want to come into your space, who you want to, who do you want to attract? you know, the law of attraction. And if you want to attract high earned, high wage clients, business owners that are 3 million, 2 million, business owners who can afford to pay you $2,500 a month, and you only have, you know, 10 clients at 25, 10 at 3,000, that's 30,000 a month. If that's what you want, you got to speak that stuff into existence, you guys. So let me not get on the soapbox because I can. So
I don't mind you being on the box because that's my motto. I don't want everybody. So you can stay on the box all night with me.
no, I mean, like,
They're headed clients. Oh,
we just have to really be careful. I had a client, I had this lady going back and forth with me today. And the last email that when I hit enter, I swear, I said, if she don't want to be with me, she don't want to be with me. She came to me and said, how come the last person I was going to was charging $700 for a corporate return and you charge $13.95? I went back and forth with her. I sent like 4 emails. The last one I sent, and I hit the send button. I said, whatever. She come back, she come back. If not, it wasn't meant to be. I was like trying to explain myself, how I have value, how we have years of experience, how we have this on our firm, on our staff, how we assist, we send quarterly newsletters and this and that and this and that. The last one I sent, I even sent my capability statement, like, here's a little bit of information on the organization. I was like, Cosette, you got other things to do.
that's not the client.
Stop
That's
right there.
not the client.
Just stop.
Mm-mm. Yeah.
After I sent that last one, she came back and said, thanks for explaining. That's all she said. She didn't say anything else. You know how they say, wash your hands for 20 seconds with COVID?
Mm-hmm.
Boom, clear, move on, next. So I need for you to step into that space, Michela, and I think you will feel a lot better about where you're at and the growth and how you can acquire new and acquire what you want, you know, and affirm it. You guys, I can tell you guys some stories, but I'm not. In the morning, just listen to motivational stuff. Listen to something that's going to keep you upbeat, something that's, I could go to bed pissed because a client sent me an email at 10 o'clock and I looked at it and I'm like thinking about it in my sleep. And the next day when I wake up, I'm like, don't even think about it. Just take a deep breath, put on some music, get your energy going, get the flowing going, say your morning prayer. Whatever you want to happen that day, speak it into existence and it will happen. And just do it, you guys. Bottom line. So, do we get to you, Courtney?
Well, I was gonna say I didn't really have any questions. I feel like you did a good job at like breaking down the forms. I feel like I need to kind of go through the legal stuff, or I guess just the law of the 7202 form. That one I feel like I'm the least familiar with. So if I can just read through all of the language, just to better understand all of the ins and outs, then I'll be able to more easily apply. Because like you said, the software will do like the math and stuff. I just need to know all of the rules so I can know what probing questions to ask and like what stuff to like look for. Once I have a good enough, like a firm grasp on that, I think I'll be fine.
Right. And you're really just having that conversation with your self-employed individuals. So what's the definition of self-employed? You know, when they say son or daughter, what defines one as a son or daughter? When they say they had COVID, did they meet those requirements? Like, did they state, local, you know, worldwide, they put them on quarantine? You know, we have those 5 states. Did they put them on quarantine? Did they have to shut down? You know, did I have a son, but guess what? 2 things. My son is 27. So did I have to take off of work for a 27-year-old? Did I have to, in here, I'm self-employed. Did I take off? I may have taken off, taken to a doctor but did I really take off? So remember, it says son or daughter under the age of 18. So just know those little things like that. Did they have a doctor's note? Did the doctor take them off? Did the doctor ask them to quarantine for a period of time. Remember, 10 days. 10 days is the limit. I don't care if they say, I caught COVID twice. I caught COVID in February. Well, if you caught COVID in February, then you don't qualify. It starts April 1st. See, they just told you right there. But then they gonna come with, well, I didn't mean February. I meant, well, give me back.
Mm-hmm.
You know what I'm saying?
Mm-hmm.
Guys, I've been in this. Okay, well, if you had it in February, because I think I had COVID in February. I really do think I had it, but it wasn't on paper or nothing. I was just sick. So that right there, I would just say, well, the dates start April. This is in effect April 1st. They're gonna come with, well, I think I had it then. You know, whatever. And I will be like, that's not a problem. I just need some backup to support it.
Mm-hmm.
And so the other thing that I want you guys to do is when you're just having natural conversation with people, and someone like my girlfriend said the other day that it was confidential, but her husband had COVID. And I said to her, because she's self-employed, I said, well, just to let you know, make sure you read up on Form 7202, because you can possibly be in a position to take some of the credits that are available to you. So she's not my client, but she's just a colleague, a friend, but I let her know. So people will like you for those type of things and come back to you and respect you and send you clients, all of the above. So just do those things, you guys. So read up on it, read up on it, read up on it. It's a really simple form, Courtney, and to all of you, it really is. Just go through, if you like me, highlight some of the parts. It's a thick one, but just pull out what's important. And process of elimination, self-employed. It's not for all of your clients, self-employed. Okay. All right, well, it's time for me to jump off and go cook dinner. So if you guys don't have any other questions, I will put this in the Facebook group. I will also put the link to my due diligence form. I'll put the link and I'll put the Word doc. That way you guys want the Word doc, is easier. Otherwise, you're going to have to take this Google Doc and put it in some type of format for yourself. So I'll upload both of them. And more than likely, I will turn around and do the same thing that I did in a video for YouTube. And so I'll send you guys the link or tag you guys and say, check out the YouTube in case I add something different to it. I know I won't, but I did those slides so I could do my YouTube as well. So I repurposed. So, all right, ladies, have a great week. Just be prepared, get some rest. Make sure you're taking your vitamins. Make sure you allow some downtime for yourself, because the next several weeks we are on, it's showtime. All right. I will see you guys next week. By then, I know next week I'll do the look back. Is that you? I thought that was you, Virginia. I'll train on the look back and anything else that I come across before that. And then we'll get back into the routine of doing our training and making sure that we're on track with marketing. What I do, I'm going to talk about marketing before I shut down. I do want all of you, because if I go to all of your pages, I don't think I see any marketing about anything. So I need for you guys to really start putting the correct message out there. You see, I didn't do a post. Something came to mind before we hopped on. But let people know what you do. Let people know. You guys can make a post about Trump second impeachment and talk about PPP and, just start it with that and then go into PPP. Something. I need y'all to do something.
I've been doing better. Well, not a lot, but I did post 2 things this week so far. Stories. I'm finding that stories are the best, you guys. You know why? Because they messaged you directly. And for those folks that are scary and they don't want everybody to see their message on your timeline, their comment, they'll send you a private message. Please do them. Please do them. Please do them. Like I said to somebody the other day,
I don't care if you post the same thing for 30 days. If it's getting results, it's getting you results. But I need for you guys to start just a little silly thing I did. Just post something. Let people know that you do taxes. Let them know about the credits. Let them know about the rebate recovery. Let them know not to rush to their tax preparer. Let them know that you are self-employed and you do taxes and you can help them. Okay. Anything else I need to cover? That's it.
When is the next training?
Every
When
Wednesday.
is,
Who said that?
I know, nobody said it. That's because I'm multitasking. Nobody said it. Don't worry about that. You didn't hear that question. Thank you so much and good night.
Okay. Every Wednesday at 4:30 Pacific Standard Time, unless something happens.
I have one question. Do you have, I know some stuff about PPP, but do you have any videos about PPP? Because I'm getting a lot, excuse me, guys, I'm getting a lot of inquiries about PPP, and I've, did the YouTube, and I've actually did the application, but just to kind of give me a little bit of, a little bit more strength to be able to guide some of these clients around PPP and the EIDL. And another question is that something that we need to put on our tax questionnaires? Like, did you receive EIDL or PPP, or is it not necessary?
So EIDL, the grant is a grant. The loan is goes on the balance sheet, so it's not taxable income. And again, we're talking to business owners here, so hopefully they come to you, with either a profit and loss statement, or they have something with their records in hand. If they were PPP and they did the loan forgiveness, they are still eligible to write off the expenses. So I'm just making it a point of reference to ask, like, did you get EIDL? Did you get PPP? I'm just asking. Because number one, every accountant is not recording or using the same practice. Some are putting that in there as income. I've seen it where a young lady got 115K. Her accountant included it as income. And I told her, you need to tell your accountant to pull this out of income. It needs to go on the balance sheet. It's a note. Do I have another meeting? It's a note. And so it needs to reside on the balance sheet, not on your profit and loss statement. I don't know. I got so many. Okay. So I would just ask, because you want to make sure that you're doing the right thing, and you don't want to overstate income because they didn't know. That's the definitely, you don't want to overstate no income, and we're talking about tax clients, so hopefully they had a bookkeeper. If they don't, this is your opportunity to ask them who's managing your books. And have something set up where you can give them a quote. It's going to be a challenge because I'm going through it right now to do tax returns, give quotes, teach, do this, but we know we got to get systems. That's for all of you. But if you have systems in place, it goes right out. So you do need due diligence, though. You do.
Okay.
Did you set up your kickoff?
Not yet.
Somehow,
I'm here.
what you doing, Regina?
I'm on a call.
Okay. We'll go over that. I didn't see what date, but we'll go over due diligence. Michaela. But in the meantime, I'm gonna get off. I'm gonna post some things in the group for you guys. I'll also post something on due diligence for you, Michaela, and any of you can use it. I'll get to it. So I'm gonna
Okay.
get off because they're knocking on the door for me, and I gotta go do mother duties, not mommy, mother duties.
Me too.
You guys have a beautiful week. I'll talk to you next week. I'll post the stuff in the group, okay?
Thank you. Nice meeting
Bye.
you, lady.
Bye-bye.
You
Bye.
too.